Hello, welcome back to Learn Oikonomia. Today we are going to discuss the idea of yield curve and yield inversion. You could see that there exists a difference between the two concepts, but how do these concepts differ? Before that, it is very important to understand the meaning of these two. So this would be the topic of discussion in today's session. Let's get started. Moving to the first concept, that is yield curve. We know that the governments of a nation would be going for borrowing because this would be mostly to deal with deficit situation. This would be mostly to deal with some emergencies. There have been various reasons for government borrowing. And when it comes to government borrowing, we have to consider something called the duration. What would be the maturity period of the kind of borrowing that the government do? So here we could see that this would this would mostly range from 1 month to it can go on till 30 years. So this would be in terms of month and this would be in terms of years. So here it would be a short term. If it is less than if it is less than 1 year, you call it as short term. More than 1 year, you call it as long term, right? And all the short term, long term things, apart from the concept of less than 1 year and more than 1 year things, they're having many other factors that you have to consider or take into consideration to determine whether it's a long term or short term. So what I was trying to tell here is that mostly when the government go for borrowings, we have to look into the duration, the maturity period of that particular loan. Why this is important? Because we have to consider something called yield. And yield would be higher for long tenures or for longer duration. Here we could see that when we consider longer tenures, the lending money for longer periods, that is what we consider. Lending money for longer periods. So this would deal with longer duration loan and this would give more yield. That is what is mostly seen. And if yields for different tenures upon are mapped, whenever you go for plotting of the same or whenever you plot it, you can get an upward sloped curve. And the curves that you get could be flat or steep. The kind of slope that we have with respect to this curve, anyway this curve would be upward sloping, but what about the steepness or flatness? What about the slope of the curve? This is something that would depend upon the money which would be available in the market, and also this would depend upon the overall economic activity, whether the economy is functioning well or not. So when the investors have different types of feeling towards the market, this would have its implications on the kind of behavior that they do, and this would definitely make some changes in the market. So when mostly investors are buoyant regarding the market, they will be putting their money in short-term riskier assets. Short-term riskier assets. So the element of risk is very important here, and this would involve putting money in something called stock market. Having said so, let me take you to the yield curve. You can see that you're measuring the time or the duration along the x-axis, and then you will be having the curve. And as you could see in the form of different colors, it would show the different yield curve, different forms of yield curve. You can have an yield curve evolving in line with changes in the economic condition. So the economic activity, the economic performance, all these would be playing an influential role here. You can have a steeper yield curve, you can have a normal yield curve, you can have a flatter yield curve, you can have an inverted yield curve as well. So this green line, as you could see, this green line is called the steeper yield curve. As I told you, it would be a positively sloped curve, and the green line is a steeper yield curve. Whereas in the case of the dark blue line, it would be a normal yield curve. In the case of the light blue line, it would be a flatter yield curve. And lastly, the maroon color line would be the inverted yield curve. Now, let me take you to the next concept, that is yield inversion. Yield inversion is something that would come into effect when yields for shorter duration of bonds would be higher when you compare yield for shorter duration and longer duration. So here this would be higher than bonds of longer duration. So what would happen if the investors suspect that the economy is going for a trouble? That can be the scenario. In this case, we could see that people will be having a fall in their marginal efficiency of capital. So in such a scenario, they will not put their money in short-term risky asset because they know that it is a negative signal that is giving. So they would be very much pessimistic. What they would do at this point is that they will be putting their money in long-term riskless assets or less risky asset. That is what you could say. Long-term less risky assets. Since we could have a kind of understanding regarding the kind of trouble that the economy would be having in the near future, it would be very much risky for people to invest their money in short-term assets. So they would be preferring the long-term asset that would appear to be less risky compared to the short-term assets. So what would happen here? This will definitely lead to a rise in the price of the assets. Assets price would be increasing. And this might lead to a fall in the yield as well. The process first lead to a flattening of the curve. The curve would be something appears like a flattening curve. Then you can have an inversion. That is how it happens. So you can understand that this could be identified as a reliable factor, a reliable predictor when it comes to recession, and this is what we could see in the US recession of 2008 period. And here the first spread, it was something that happened to be between the yield of 10-year and 3-month treasury, and these have turned to be negative as well. So that's all about the case with yield curve and yield inversion. I hope you could understand. Kindly like, share and subscribe to this channel for more video. You can join our free Telegram community. For this, you can take the link from the description box. Also, you can download the Learn Oikonomia app. For that also, I'll be providing the link in the description box. That's it. Thank you for watching.